Question 1. In Rhode Island, when an insured has a homeowner's insurance policy HO3 that includes coverage for personal property, which of the following is the primary factor that would determine the payout amount in the event of a covered loss? A. The actual cash value of the property at the time of loss. B. The replacement cost of the property without depreciation. C. The original purchase price of the property. D. The appraised value of the property. Answer A. The actual cash value of the property at the time of loss. Explanation. The homeowner's policy HO3 typically provides coverage for personal property based on actual cash value SEV, which is defined as the replacement cost of the item minus depreciation. This is particularly important because it reflects the current value of the property at the time of loss, not its original purchase price or appraised value. Thus, understanding how depreciation affects payout amounts is crucial for policyholders to assess their coverage adequately. For comprehensive coverage, some insureds may choose endorsements that convert their coverage from ACV to replacement cost, which eliminates depreciation considerations. However, in standard circumstances, ACV remains the determining factor for the payout in the event of a covered loss. Question 2. A Rhode Island-based contractor is preparing to bid on a construction project. To fulfill the requirements of the contract, he must obtain a performance bond. Which of the following statements accurately describes the role of the surety in this scenario? A. The surety guarantees the contractor will complete the job for a specified amount. B. The surety provides the contractor with financing to complete the project. C. The surety ensures that the contractor will pay all subcontractors involved in the project. D. The surety takes over the project if the contractor fails to perform. Answer A. The surety guarantees the contractor will complete the job for a specified amount. Explanation. In this scenario, a performance bond is a type of surety bond that guarantees that the contractor will fulfill the contractual obligations as specified in the agreement. The surety acts as a third-party guarantor, ensuring that if the contractor fails to perform or complete the project according to the terms of the contract, the surety will compensate the project owner for the financial loss up to the amount of the bond. The surety does not provide financing, nor does it ensure payments to subcontractors directly. Although the surety may assume responsibility in case of non-performance, it does not take over the project in a hands-on manner. Understanding the role of the surety is essential for contractors engaging in projects requiring such bonds. Question 3. Scenario-based. Mr. Thompson owns a small retail store in Rhode Island and has a commercial general liability CGL policy. One evening, a customer slips and falls in his store, sustaining an injury. The customer files a claim against Mr. Thompson for medical expenses and lost wages. Under his CGL policy, what steps should Mr. Thompson take to ensure the claim is properly addressed? A. Ignore the claim since he has insurance coverage. B. Immediately inform his insurance agent about the incident and provide all necessary details. C. Handle the claim directly with the customer without involving the insurance company. D. Only report the claim if the customer's medical expenses exceed his policy's deductible. Answer B. Immediately inform his insurance agent about the incident and provide all necessary details. Explanation. In the event of a liability claim, it is critical for Mr. Thompson to immediately inform his insurance agent about the incident. Under the terms of most commercial general liability CGL policies, the insured is obligated to notify the insurer of any claims or potential claims promptly. This allows the insurance company to manage the claim efficiently, investigate the incident, and provide the necessary legal defense if needed. Ignoring the claim or attempting to handle it directly could result in a breach of the policy terms, which may lead to denial of coverage. Additionally, reporting the claim regardless of the deductible is important because the claim could involve significant legal or settlement costs beyond the deductible amount. Understanding the obligations under his CGL policy is essential for Mr. Thompson to protect his business effectively. Question 4. Under Rhode Island's workers' compensation laws, which of the following statements best describes the concept of compensable injury? A. Any injury sustained during the employee's commute to work is considered compensable. B. An injury that occurs as a direct result of the employee's job duties and within the scope of employment is compensable. C. Injuries resulting from the employee's own negligence are never compensable. D. An injury that occurs during a lunch break is always considered compensable. Answer B. An injury that occurs as a direct result of the employee's job duties and within the scope of employment is compensable. Explanation. A compensable injury under Rhode Island's workers' compensation laws refers specifically to injuries that arise out of and in the course of employment. This means that the injury must be directly linked to the employee's job duties and occur during work hours or in a work-related context. While commuting injuries, option A, are generally not compensable unless the employee is performing work-related tasks. Negligence by the employee does not automatically disqualify compensation, contrary to option C. Regarding lunch breaks, option D, these injuries may or may not be compensable depending on the circumstances, such as whether the employee is on the employer's premises or engaged in work-related activities. Understanding the criteria for compensable injuries is crucial for both employers and employees. Question 5. Which of the following best explains the purpose of the National Flood Insurance Program, NFIP, as it relates to Rhode Island? A. To provide insurance exclusively for commercial properties located in flood zones. B. To offer subsidized flood insurance rates to homeowners in high-risk flood areas. C. To ensure that only government properties are protected against flooding. D. To eliminate the need for any private flood insurance market. Answer: B. To offer subsidized flood insurance rates to homeowners in high-risk flood areas. Explanation: the National Flood Insurance Program (NFIP) aims to provide flood insurance to property owners, renters, and businesses in participating communities, particularly in high-risk flood zones. By offering subsidized insurance rates, the NFIP encourages homeowners to purchase flood insurance, thereby reducing the financial burden on both the insured and the government in the event of a flood. It is designed to promote floodplain management practices to minimize flood damage. The NFIP does not focus solely on commercial properties, option A, nor does it restrict coverage to government properties, option C. While the NFIP does influence the private flood insurance market, it does not aim to eliminate it, option D. Understanding the NFIP's role is vital for residents of flood-prone areas in Rhode Island. Question 6. Mr. Allen is a commercial property owner in Rhode Island. He is evaluating his insurance options and wants to ensure that he has adequate protection for potential income loss due to property damage. Which insurance coverage should Mr. Allen consider adding to his policy? A. Business personal property coverage. B. Business income and extra expense coverage. C. Equipment breakdown coverage. D. General liability coverage. Answer: B. Business income and extra expense coverage. Explanation: business income and extra expense coverage is specifically designed to protect against loss of income due to a covered peril that causes physical damage to the insured property. This coverage compensates for lost revenue during the period of restoration, ensuring the business can continue operating financially despite the interruption, while business personal property coverage, option A, protects the physical assets. It does not cover income loss. Equipment breakdown coverage, option C, addresses losses due to equipment failure, and general liability coverage, option D, protects against third-party claims but does not provide for lost income. Therefore, for Mr. Allen, adding business income and extra expense coverage is essential to safeguard against potential financial losses stemming from property damage. Question 7. A Rhode Island business owner decides to purchase an umbrella policy. Which of the following statements correctly describes the primary benefit of this type of insurance? A. It provides coverage for losses not included in the underlying primary policies. B. It is designed to replace all primary insurance policies. C. It only covers bodily injury claims. D. It is mandatory for all businesses operating in Rhode Island. Answer A. It provides coverage for losses not included in the underlying primary policies. Explanation: an umbrella policy is an additional layer of liability insurance that offers broader coverage beyond the limits of primary policies such as general liability, auto liability, and employer's liability. Its primary benefit is to provide coverage for claims that may not be covered by the underlying policies, option A, thus protecting the insured against significant losses. Umbrella policies do not replace primary insurance, option B, but rather enhance it. While they can cover bodily injury claims, they also encompass property damage and personal injury claims, making option C inaccurate. Additionally, umbrella insurance is not mandated for all businesses, option D, though it is highly recommended for adequate protection against high-stakes liability claims. Understanding the scope of umbrella policies is essential for business owners in Rhode Island to effectively manage their risk exposure. Question 8. Which of the following actions is considered an unfair trade practice under Rhode Island insurance laws? A. Refusing to issue a policy to an applicant based on their credit history. B. Offering a policy with terms that are less favorable than those available in the market. C. Misrepresenting the benefits of an insurance policy to a potential customer. D. Providing coverage to high-risk individuals at standard rates. Answer: C. Misrepresenting the benefits of an insurance policy to a potential customer. Explanation: under Rhode Island insurance regulations, misrepresentation is explicitly identified as an unfair trade practice. This involves providing false or misleading information about the benefits, terms, or conditions of an insurance policy, which can lead to consumer harm and erode trust in the insurance industry. Refusing to issue a policy based on credit history, option A, is permissible under specific regulations while offering less favorable terms. Option B is also a standard practice within the market unless it violates specific statutes. Providing coverage to high-risk individuals at standard rates. Option D is not inherently unfair, but may raise concerns regarding the sustainability of such practices. Therefore, understanding what constitutes unfair trade practices is essential for insurance professionals in Rhode Island to ensure compliance with state laws. Question 9. A personal auto policy (PAP) includes various coverages. If a driver is involved in an accident where they are at fault, which coverage will typically pay for damages to the other party's vehicle? A. Medical payments coverage. B. Collision coverage. C. Bodily injury liability coverage. D. Property damage liability coverage. Answer: D. Property damage liability coverage. Explanation: in a scenario where the insured driver is at fault in an accident, property damage liability coverage is the insurance that pays for damages to the other party's vehicle or property. This coverage is designed to protect the insured against claims arising from their legal liability to others for property damage. Bodily injury liability coverage, option C, would cover medical expenses for injuries to the other party but not for vehicle damage. Collision coverage, option B, applies to damages to the insured's own vehicle in an accident, regardless of fault, while medical payments coverage, option A, addresses medical expenses for the insured and passengers but does not cover damages to other vehicles. Therefore, property damage liability is the relevant coverage in this context. Question 10. Which of the following types of insurance provides coverage for theft of business property and includes loss from employee dishonesty? A. Business income coverage. B. Commercial general liability coverage. C. Commercial crime insurance. D. Professional liability coverage. Answer: C. Commercial crime insurance. Explanation: commercial crime insurance is specifically designed to protect businesses from losses due to criminal activities, including theft, burglary, and employee dishonesty. Fidelity. This type of insurance provides coverage for a range of crimes that can affect business operations, ensuring financial protection against potential losses. Business income coverage, option A, addresses loss of income due to covered property damage but does not include theft. Commercial general liability coverage, option B, protects against third-party claims for bodily injury or property damage but does not cover theft or criminal acts. Professional liability coverage, option D, is focused on protecting professionals against claims of negligence or failure to perform professional duties, not theft. Therefore, commercial crime insurance is essential for business owners looking to safeguard against theft and related losses. Question 11. Which of the following statements about the Rhode Island Insurance Fraud Prevention Act is true? A. It requires all insurance companies to report suspected fraudulent claims to the authorities. B. It mandates that only agents are liable for fraudulent statements made during the application process. C. It only applies to health insurance claims. D. It exempts companies from liability if they inadvertently process a fraudulent claim. Answer A. It requires all insurance companies to report suspected fraudulent claims to the authorities. Explanation: the Rhode Island Insurance Fraud Prevention Act establishes a legal framework that requires insurance companies to report suspected fraudulent claims to the appropriate authorities. This legislation is designed to combat insurance fraud and protect the integrity of the insurance system. While agents may face consequences for knowingly providing fraudulent information, option B, the Act applies broadly to all types of insurance, not just health insurance, option C. Companies are not exempt from liability for processing fraudulent claims, even if done inadvertently, option D. Understanding the implications of this Act is crucial for insurance professionals operating in Rhode Island. Question 12. In Rhode Island, what is the primary purpose of the Unfair Trade Practices Act as it pertains to insurance? A. To ensure that all insurance premiums are the same across companies. B. To protect consumers from unfair, deceptive, or fraudulent insurance practices. C. To eliminate competition among insurance providers. D. To regulate the rates set by insurance companies for all types of policies. Answer: B. To protect consumers from unfair, deceptive, or fraudulent insurance practices. Explanation: the Unfair Trade Practices Act aims to protect consumers by prohibiting unfair, deceptive, or fraudulent practices in the insurance industry. This includes misleading advertising, false claims, and misrepresentation of policy benefits. The Act does not standardize premiums across companies, option A, nor does it seek to eliminate competition, option C. While it may involve some regulation of rates, its primary focus is on consumer protection rather than direct rate regulation, option D. Awareness of this Act helps ensure that insurance companies operate fairly and transparently. Question 13. A Rhode Island homeowner experiences water damage due to a broken pipe. Which type of insurance coverage is typically required to cover this loss? A. Homeowner's policy with flood endorsement. B. Water backup coverage. C. Homeowner's policy with sewer backup coverage. D. Standard homeowner's policy. Answer: D. Standard homeowners policy. Explanation: in general, a standard homeowners policy covers water damage caused by sudden and accidental incidents, such as a broken pipe. This type of coverage is essential for protecting against unexpected plumbing failures, while water backup coverage, option B, and sewer backup coverage, option C, can be added to policies for specific types of water damage. They do not apply to damage caused by broken pipes unless it is specifically related to sewer or drainage backups. The homeowners policy with flood endorsement, option A, typically covers damage caused by flooding, which is distinct from damage caused by internal plumbing issues. Understanding the nuances of coverage is vital for homeowners to ensure adequate protection. Question 14. Which of the following best describes the term subrogation in the context of insurance? A. The process by which an insurance company pays claims directly to the insured. B. The right of an insurer to pursue a third party that caused a loss to the insured after paying a claim. C. The negotiation of insurance policy premiums. D. The denial of a claim based on policy exclusions. Answer: B. The right of an insurer to pursue a third party that caused a loss to the insured after paying a claim. Explanation: subrogation is a critical concept in insurance that allows an insurer to step into the shoes of the insured and seek reimbursement from a third party responsible for a loss after it has paid a claim. This process helps the insurer recover its costs and keeps insurance premiums manageable. Option A incorrectly describes the claims payment process, while option C does not relate to subrogation. Option D addresses claim denial, but is not associated with the subrogation process. Understanding subrogation is essential for both insurers and policyholders in managing claims and recovering losses. Question 15. What is the primary purpose of a liability coverage (ICA) commercial auto insurance policy? A. To cover physical damage to the insured vehicle. B. To protect against bodily injury and property damage to others caused by the insured vehicle. C. To provide coverage for theft of the insured vehicle. D. To offer medical payments to the insured driver. Answer: B. To protect against bodily injury and property damage to others caused by the insured vehicle. Explanation: liability coverage in a commercial auto insurance policy is designed to protect the insured against legal liabilities arising from bodily injury and property damage caused to third parties in an accident involving the insured vehicle. This coverage is essential for safeguarding businesses from financial loss due to lawsuits or claims resulting from accidents. Options A and C focus on coverage for the insured vehicle itself, which are typically covered under collision and comprehensive coverage, respectively. Option D, while important, pertains to medical payments coverage and does not capture the essence of liability coverage. Understanding liability coverage is crucial for businesses operating vehicles. Question 16. In Rhode Island, how often must insurance companies provide policyholders with a notice of their rights under the state's privacy laws? A. At the time of policy renewal only. B. Once a year. C. Every time a claim is filed. D. Every 5 years. Answer: B. Once a year. Explanation: under Rhode Island's privacy laws, insurance companies are required to provide policyholders with a notice of their rights regarding personal information once a year. This ensures that policyholders are aware of how their information is collected, used, and shared, fostering transparency in the insurance process. The other options, A, C, and D, do not meet the legal requirements set forth by the state's regulations. Understanding these rights helps consumers make informed decisions about their insurance policies and the protection of their personal information. Question 17. Which of the following coverages would typically apply to a business that suffers property damage due to a natural disaster in Rhode Island? A. Business income coverage. B. Property damage liability coverage. C. Commercial property insurance. D. Umbrella insurance. Answer: C. Commercial property insurance. Explanation: commercial property insurance is specifically designed to cover losses due to property damage from various causes, including natural disasters such as storms, floods, and earthquakes. This coverage protects the physical assets of a business. Business income coverage, option A, compensates for loss of income due to property damage but does not cover the damage itself. Property damage liability coverage, option B, pertains to damages caused by the business to others' property rather than damage to the business's own property. Umbrella insurance, option D, provides additional liability coverage but does not directly cover property damage. Therefore, commercial property insurance is the appropriate coverage for businesses affected by natural disasters. Question 18. In the context of insurance, what does the term exclusion refer to? A type of insurance policy that does not cover specific risks. B. The amount deducted from. A claim payment. C. A clause that mandates a policyholder to maintain certain safety standards. D. A provision that allows the insurer to cancel the policy without notice. Answer A. A type of insurance policy that does not cover specific risks. Explanation: an exclusion in an insurance policy specifies certain risks, perils, or conditions that are not covered by the policy. Understanding exclusions is crucial for policyholders as these can significantly impact coverage availability and claims. Option B describes a deductible rather than an exclusion, while option C pertains to conditions rather than exclusions. Option D relates to policy cancellation procedures but is not associated with exclusions. Awareness of exclusions helps consumers understand the limitations of their insurance coverage. Question 19. Which of the following is NOT typically covered under a standard homeowners insurance policy in Rhode Island? A. Theft of personal property. B. Damage to personal property caused by fire. C. Damage caused by an earthquake. D. Liability for injuries sustained on the insured property. Answer: C. Damage caused by an earthquake. Explanation: a standard homeowners insurance policy typically covers theft of personal property. Option A, fire damage. Option B, and liability for injuries on the property. Option D, however, usually excludes coverage for earthquake damage. Option C, which must be purchased as a separate endorsement or policy. Homeowners need to be aware of these exclusions to ensure they have the appropriate coverage for their risks. Question 20. What type of coverage would a Rhode Island business need to protect itself against employee theft or dishonesty? A. General liability insurance. B. Employment practices liability insurance. C. Commercial crime insurance. D. Business interruption insurance. Answer: C. Commercial crime insurance. Explanation: commercial crime insurance is specifically designed to protect businesses against losses resulting from employee theft or dishonesty, as well as other criminal acts such as fraud and burglary. General liability insurance, option A, covers third-party claims for bodily injury or property damage but does not address employee-related theft. Employment practices liability insurance, option B, protects against claims related to employment practices such as wrongful termination or discrimination but does not cover theft. Business interruption insurance, option D, compensates for lost income due to disruptions in operations but does not cover theft or dishonesty. Thus, commercial crime insurance is essential for businesses looking to safeguard themselves against potential financial losses due to dishonest acts by employees. Question 21. In a Rhode Island personal auto policy, which coverage is responsible for paying for damages to your own vehicle after a collision with another vehicle? A. Liability coverage. B. Collision coverage. C. Comprehensive coverage. D. Medical payments coverage. Answer: B. Collision coverage. Explanation: collision coverage pays for damages to your own vehicle resulting from a collision with another vehicle or object, regardless of fault. Liability coverage, option A, only pays for bodily injury and property damage to others when the insured is at fault. Comprehensive coverage, option C, protects against non-collision related damages such as theft or weather-related incidents. Medical payments coverage, option D, covers medical expenses for the insured and passengers regardless of fault but does not address vehicle damage. Question 22. What is the primary function of an underwriter in the insurance industry? A. To sell insurance policies to consumers. B. To evaluate risks and determine policy terms. C. To investigate claims for fraud. D. To handle customer service inquiries. Answer: B. To evaluate risks and determine policy terms. Explanation: The primary function of an underwriter is to evaluate the risks associated with insuring a person or entity and to decide the appropriate terms and pricing for a policy. This includes assessing the applicant's risk profile and determining coverage limits. Selling insurance policies, option A, is typically the role of an agent, while investigating claims, option C, falls under claims adjusters. Handling customer service inquiries, option D, is part of the customer service team's responsibilities. Question 23. Mr. Thompson runs a small restaurant in Rhode Island. After a severe storm, his business suffers property damage and loss of income due to closure. Which policy would best cover both aspects of his loss? A. General liability insurance. B. Business interruption insurance. C. Property insurance. D. Commercial umbrella insurance. Answer: B. Business interruption insurance. Explanation: Business interruption insurance provides coverage for loss of income due to a temporary shutdown resulting from a covered peril, such as property damage from a storm. General liability insurance, option A, protects against third-party claims but does not cover property damage or loss of income. Property insurance, option C, covers physical damage to the restaurant but does not compensate for lost income. Commercial umbrella insurance, option D, provides additional liability coverage above existing policy limits but does not specifically cover property damage or business income loss. Question 24. Which of the following is a key component of a commercial general liability CGL policy that provides coverage for bodily injury to third parties? A. Premises liability coverage. B. Professional liability coverage. C. Personal injury coverage. D. Product liability coverage. Answer: A. Premises liability coverage. Explanation: Premises liability coverage protects against bodily injury claims that occur on the insured's premises due to their negligence. Professional liability coverage, option B, is designed for professionals and covers errors and omissions in their services. Personal injury coverage, option C, protects against claims of non-physical injury such as defamation, while product liability coverage, option D, deals with injuries or damages caused by products sold by the business. Question 25. Under Rhode Island law, which of the following is required for all personal auto insurance policies? A. Collision coverage. B. Comprehensive coverage. C. Bodily injury liability coverage. D. Medical payments coverage. Answer: C. Bodily injury liability coverage. Explanation: Rhode Island law mandates that all personal auto insurance policies include bodily injury liability coverage to protect against claims arising from injuries to others in an accident where the insured is at fault. Collision coverage, option A, and comprehensive coverage, option B, are optional coverages. Medical payments coverage, option D, is also optional but is often included for additional protection. Question 26. Which type of insurance policy would provide coverage for a business's lost income due to a fire that forces the business to close temporarily? A. Property insurance. B. Business interruption insurance. C. Workers' compensation insurance. D. Errors and omissions insurance. Answer: B. Business interruption insurance. Explanation: Business interruption insurance covers lost income and operating expenses during the period of recovery after a covered event like a fire. Property insurance, option A, covers the physical damage to the business property but does not provide compensation for lost income. Workers' compensation insurance, option C, covers employee injuries but is unrelated to business income loss. Errors and omissions insurance, option D, provides liability coverage for professional services but does not address business income. Question 27. In a commercial package policy (CPP), which coverage is typically included to protect a business against claims arising from its operations? A. Business auto coverage. B. Commercial general liability coverage. C. Workers' compensation coverage. D. Inland marine coverage. Answer: B. Commercial general liability coverage. Explanation: Commercial general liability coverage is included in a commercial package policy to protect against third-party claims for bodily injury and property damage arising from the insured's operations. Business auto coverage, option A, covers vehicle-related liabilities, but is separate from general liability. Workers' compensation coverage, option C, addresses employee injuries, while inland marine coverage, option D, pertains to specific types of property and is not a standard inclusion in all CPP. Question 28. An insurance agent discovers that a competitor is engaging in deceptive marketing practices. What should the agent do according to Rhode Island insurance regulations? A. Ignore the situation. B. Report the competitor to the Rhode Island Insurance Department. C. Confront the competitor directly. D. Create A marketing campaign to counteract the competitor. Answer: B. Report the competitor to the Rhode Island Insurance Department. Explanation: according to Rhode Island insurance regulations, agents have a duty to report unethical practices, such as deceptive marketing, to the Rhode Island Insurance Department. Ignoring the situation, option A, is unethical while confronting the competitor directly. Option C may escalate tensions without proper resolution, creating a counter-marketing campaign. Option D is also not advisable as it does not address the unethical practices and may further complicate the issue. Question 29. Which coverage in a standard homeowner's insurance policy protects against loss of personal belongings due to theft? A. Dwelling coverage. B. Other structures coverage. C. Personal property coverage. D. Liability coverage. Answer: C. Personal property coverage. Explanation: personal property coverage protects homeowners against loss or damage to personal belongings within the home due to various perils, including theft. Dwelling coverage, option A, protects the structure of the home itself, while other structures coverage, option B, provides coverage for structures not attached to the home, such as sheds or garages. Liability coverage, option D, protects against claims made by others for bodily injury or property damage, but does not cover personal belongings. Question 30. A Rhode Island business owner is considering an umbrella liability policy. What is a primary benefit of this type of policy? A. It covers losses from business interruption. B. It provides additional coverage beyond standard policy limits. C. It includes property coverage for physical assets. D. It covers employee injuries not included in workers' compensation. Answer: B. It provides additional coverage beyond standard policy limits. Explanation: an umbrella liability policy provides an extra layer of liability coverage beyond the limits of standard insurance policies, protecting the business from large claims that could exceed those limits. It does not cover losses from business interruption, option A, nor does it provide property coverage, option C, or cover employee injuries not included in workers' compensation, option D.